Greetings, everybody. Welcome to Liberty Call. Today is March 9th. It's a Thursday, 2023. Hope everybody's having a fantastical day out there in the interwebs. It is a bloodbath in the stock market today. I saw some news that some crypto bank going tits up, and that's not a good thing. And it looked like the market kind of, sucked in some of that contagion. So was not a pretty day here in the Americas, and not great overseas, but, lots of red on the screen today, even going back to the overnight. So anyways, if it's your first time watching the Liberty Call, please give me some thumbs up, likes, shares, subscribes, follows, all that good stuff. Hit all the buttons underneath here. Just press them all. I don't care. All right. Well, let's go ahead and jump into the news and see how things turned out for today. Dow Jones was down 1.65%, closed at 32,256. It was down 542 points. S&P 500 down 1.81%, closed at 3919. NASDAQ down 2.05%, closed at 11,338. The VIX was up 16.75% today. It's at 2231. And for people who've been watching this on a regular basis, you know how I view the VIX. Anything below a 20 is a green light, 20 to 30 is your yellow light, anything above 30 is your red light, and proceed with caution. So, yellow light's just kind of a warning, but again, the volatility is picking up. Not really surprising since we had such a crappy day, but anyways. All right, let's see here. Canada was down 1.28, Brazil down 1.24, Mexico down 0.03. Over in Europe, Germany was flat at up 0.01, UK down 0.63, France down 0.12, Netherlands down 0.02, Spain down 0.45, Italy down 0.72, Switzerland down 0.69, and Portugal, a small gain of up 0.01%. Russian exchanges were open and today. The MOEX was down 0.24, RTSI down 0.05. And the overnights in Asia, starting with Japan, the Nikkei was up 0.63, Australia up 0.05, Chinese markets all red, Shanghai down 0.22, the SESE component down 0.16, China A50 down 0.61, DJ Shanghai down 0.36, Hang Seng down 0.63, and the Taiwan weighted down 0.3%. Like I told you, it is a bloodbath. I thought about showing the end of Texas Chainsaw Massacre, but I hadn't seen it in a while. I thought that would be a kind of a funny intro into the show, but it's just this woman screaming, and I mean, it's been years since I've seen it. So I got the poster. I had it as a teenager. I had it up on the wall or in the back of my bedroom door, and I'm not sure where it is. It's probably still in my dad's old house somewhere. So, anyways. All righty, well, let's go ahead and read through today's market recap. S&P 500 slumps as SVB Financial leads rout in banks ahead of Friday's job data. All right, the S&P 500 took a hit on Thursday as banking stocks slumped led by SVB Financial Group, which plummeted over 55% after announcing a $2.25 billion equity raise following a net loss of $1.8 billion and a negative annual and Q1 guidance. SIVB, unlike most banks, is generally hurt by higher interest rates, and this further soured sentiment on banking stocks already pressured by a deeper inversion in the yield curve. Bank of America, Wells Fargo, and JP Morgan all fell more than 5%, while crypto bank Silvergate Capital plummeted 20%. Meanwhile, General Electric bucked the trend, up nearly 7% after reaffirming its 2023 guidance, forecasting adjusted earnings per share of $1.60 to $2. High single-digit organic revenue growth. PayPal also remained above the flat line after its CEO announced that the company was seeing better than expected performance across the business. The slump in banking stocks and overall market sentiment comes just a day before the non-farm payrolls report, which is expected to show that the economy created 205,000 jobs in February. Investors are on edge ahead of the report, fearing that a red-hot reading could cement the return of aggressive Federal Reserve rate hikes, adding to pressure on the already struggling banking sector. Technology also played a role in the broader market, with Meta Platforms stumbling more than 1%. General Motors fell 4% after flagging a $1.5 billion hit from its voluntary separation program, seeking to buy out the majority of salaried staff. The slump on Wall Street shows the challenges and volatility in the market as investors remain cautious amid ongoing uncertainty. Well, isn't that just life? I mean, everything's uncertain. You know, I could get hit by a truck tomorrow, but hope not. that'd be my plan to be around for a little bit longer. So, alrighty. Next up, U.S. jobless claims hit 10-week high of 211,000. The number of people claiming unemployment benefits for the first time rose to a 10-week high, a sign that the labor market may be losing its ability to defy gravity. The Labor Department said initial jobless claims rose to 211,000 last week from 190,000 the week before. Analysts had expected only a small uptick to 195,000. The less volatile 4-week average, arguably a better indicator of the trend, also rose to a 6-week high of 197,000. At the same time, continuing jobless claims also surprised to the upside, rising to 1.718 million and matching a 14-month high. Kathy Jones, chief fixed income strategist at Charles Schwab, said via social media that the numbers were, quote, small signs that the labor market may be softening, end quote. The figures are more consistent with the slowdown in hiring that analysts have been predicting for weeks as the economy adjusts to a year of interest rate rises from the Federal Reserve. They add weight to claims made by some that the exceptionally high job gains detailed in the first 2 labor market reports of the year are largely due to seasonal adjustments. I think we covered that a couple times already, that the numbers are bunk. Seasonal adjustment factors and other statistical oddities rather than unbridled strength of the labor market. Even so, the weekly claims numbers are just one soft data point among several firmer ones. Earlier on Thursday, the Challenger Job Cut Survey, which analyses a cross-section of businesses across the United States, reported a decline in job cuts last month, supporting anecdotal evidence of labor hoarding by companies in a market where there are still nearly 2 unfilled jobs for every unemployed person. On Wednesday, meanwhile, ADP said private sector payrolls grew by 242,000 through the middle of last month, more than double its estimate for January. The Labor Department will release the official employment data for March on Friday at 8:30 a.m. tomorrow. All right. Excellent news. So I feel like I'm pointing out the tallest midget the last year. It's like, hey, this isn't so bad. Hey, that's not so terrible. All right. Next up, President Biden unveils a $6.9 trillion budget blueprint. Boy, that sounds like cost cutting. I mean, he was bragging about, I lowered the deficit. Well, the deficit's just how much we overspend by. I mean, granted, the average American's dumb as a brick, but lowering the deficit is just lowering how much you overspend by on a yearly basis. And to point out that he lowered the deficit more than than the previous year when Trump was in office, it's like, wait a minute. You had all that COVID spending, all that nonsense that a lot of red and blue people voted for. And to say, wow, that wasn't us. Not me. Anyways, let's go ahead and dive into the article. President Biden has proposed a $6.9 trillion budget plan that includes a range of tax hikes on wealthy Americans to reduce the deficit and fund key programs such as Medicare. Yeah, that's going to collapse at some point. The plan includes an increase in funding of government programs such as extending the solvency of Medicare, lowering prescription drug prices, and cutting the deficit by $3 trillion over the next decade. Okay, you're going to cut how much we overspend by $3 trillion over a 10-year period. Come on. Who is stupid enough to fall for this crap? I'm sure there's some people, but anyways. However, the deficit in 24 is expected to increase from 1.6 trillion to 1.8 trillion, and the gross federal debt would rise to 51 trillion after a decade. Wow. So we're at 31.5 trillion today. We'll add another 20 trillion on just in 10 years. Hey, that sounds like a great deal. In a year when the GOP leaders have vowed to pursue at least 150 billion in spending cuts. Okay, that's what? If we spend 6 or almost 7 trillion and you're going to reduce it by 150 billion, it's so tiny. That's a little tiny number. Way to go, Republicans. And refuse tax increases. Biden's proposal would instead add 77 billion to defense and non-defense spending while increasing taxes by 5.5 trillion over the next decade. Here's an idea. How about we get rid of Washington and just run stuff at the state level? And I can save 30 or 40% that gets sucked away to the federal government that just pays for welfare and mostly government jobs, which I view that as welfare anyways. All right. The White House's wish list of policies include restoring the full child tax credit, imposing a billionaire minimum tax, increasing the corporate tax rate, making permanent some tax credits related to the Affordable Care Act, and providing national paid leave. Okay, who's going to pay for this? National paid leave. First of all, that's not in the federal government's jurisdiction. paying out leave benefits, to workers in states all over. It just so dumb. Where was I? The head of the Office of Management and Budget, Shalonda Young, said the budget release is a start of a healthy dialogue and that the White House is prepared to have a debate with Republicans who will likely argue that the president's budget will hurt growth. Well, duh. House Speaker Kevin McCarthy, Rhino, said the House budget plan will be delayed because Biden's budget was a month late and Republicans need to analyze it. Yeah, like they even read the stuff they vote on. But he flatly ruled out Biden's proposed tax increases, stating that I do not believe raising taxes is the answer. Republicans are seeking to balance the budget within 10 years. I've been hearing that my whole life. A feat that would require some $20 trillion in spending cuts if no taxes are increased. It's clear by the relatively extreme nature of the proposal that it is certain to be rejected by the Republican-controlled House of Representatives and show no inclination towards compromise. All right. Well, that's some good news there. All right. Last up, just some little food for thought. Comes from Think Advisor, an email I get through my work email address. 13 states with the highest property tax rates. So let's go ahead and bring up the slideshow. All right. Let me go back to the beginning because I was perusing this earlier. All right. Come on. Let's go back. Sorry. All right. Number 13, Ohio has an effective real estate tax rate of 1.53%. So the average taxes on a $244,900 home is $37.48 a year. So again, for people who may be retiring at some point here in the future, where you live is kind of important. So, some of those states that have, no state income tax, they make it up on the other side with property taxes. Number 12, Pennsylvania has an effective tax rate of 1.53% on that same $244,900 home, $37.51 per year. 11 is Rhode Island with a 1.53% tax rate. Iowa with a 1.57%. Nebraska, 1.67%. Too fast. New York has a 1.73%. So on that same home, you'd pay $42.31 in taxes. Number 7, Wisconsin, 1.73. Number 6, Texas. Used to live there, spent most of my life in the state, and the average for the state is 1.74. I can speak to where I lived in the south end of Houston in Clear Lake. I was paying over 3% because the schools there, well, they're quite expensive. And, I grew up through those same schools. They were pretty good when I was a kid. Not as impressed when my own kids went through them, but, is what it is. Number 5, Vermont, a 1.9% rate. 4 is New Hampshire at 2.09%. On that same $244,000 home, it'd be $51.20 in taxes. Number 3 is Connecticut at 2.15%. Illinois coming in at 2.13%. And then number 1, New Jersey at 2.47%. So again, on that same $245,000 home, you pay $6,057 in taxes. So not awesome, but something just to keep in mind as you plan on where you're going to live. You may do your working years in one place and then decide I'm going to escape to somewhere with obscenely low tax rates, especially since I'm not having earned income, and that way I can get the best of both worlds. So. But again, look at also if you have city taxes, other things, depending upon where you're going to domicile yourself for tax purposes later on in life. All right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. I hope everyone has a fantastical evening, and I'll talk to you next time. Adios.